I know some people just want to do new construction, but
hmm
does your company offer incentives to match what new construction builders are offering?
So it is very hard to So I'll tell you this: if somebody qualifies for our forward commitment deal, another lender's just not going to be able to beat that. A
Mhm.
5.75 rate at
Right,
no cost to the customer.
right.
You can't be the. I've seen I've seen loan estimates from other lenders at subdivisions or the builders where, yeah, you're buying the rate down to 5.875, but they were, it's not that it's a bad deal, but they gave you the lender credit. It was just like a one for one kind of deal. So, and so that's fine. But even that, like giving right now in the mortgage business, there's just not enough margins in the business to give somebody $6,000 in lender credit and for them to buy the rate down, outside of your builder helping fund that. Now, I will say this: Silverton does. We do have an approved builder. We do have some other builder relationships outside of like Chafin, which is, and the reason why we have the relationship like that with Chafin is because Chafin and Silverton are owned by both by the same company. They're both owned by Clayton Homes, which is a
Oh,
Berkshire
okay.
Hathaway company. So that makes it another kind of hard reason. Now, if somebody comes in with a VA or FHA loan and they don't, and our terms aren't as good as whoever, Navy Federal, the salespeople are probably not going to try to push Silverton too hard because they need to make that sale. But outside of the builders that Clayton actually owns, we do have builder accounts where we're the preferred builder on. I'm always looking to get introduced to builders because we have like an established program that we go to and get builders approved, and then we can provide a lender credit based on the loan amount, so that helps with the offset the cost of the customer, their costs, or help lower the rate. And if there's lenders other lenders on that account that they're offering richer incentives, then I can go back to management and just like, hey, we're offering 5, they're offering 10. That's simple math. Who you gonna go with? Sort of thing. So, they may, grant an exception or concession where I can offer, as long as they're still profitable, where we
Mhm.
can offer the higher incentives. Because I mean, it's pretty rich out there. I've been seeing and hearing some lenders offering as much as $20,000,
Yeah.
and it's a very good it's a really good time for buyers if they're interested in new construction.
Yeah, definitely. That leads me to another question. So,
Mhm.
as far as the interest rates, we already know the interest rates are higher, definitely higher than they were a couple of years ago. But what is your opinion about buying at this point versus trying to wait it out another 12
Sure.
months to try to see? Are
Yeah.
you encouraging people to go ahead and buy and then kind of wait it out, or telling them, well, it might be best for you to just sit this?
The only time most of my advice mostly has been to buy now, because the thing about buying now is there's less competition.
Yeah.
Now, I will say, well, I was about to say I hadn't locked anybody in these really high rates, but no, that's not true. I actually have somebody, but there are things that you can do. I have seen where people are getting, especially in some areas of town are still very competitive.
Hmm.
The Mariettas and the Brookhavens and places like that they're just going to be competitive by nature. However, I've seen a number of people get really good deals, get some closing costs paid for. My closing on Monday, I think she got like $5,500 in seller paid closing costs. The one closing early next month where she got $10,000 in seller paid closing costs, and so she's using that to fund most of that to fund a 2-1 buy down. And you heard me mention that earlier. So essentially, her interest rate was 7.625, but the first 12 payments, she's going to be making payments based on a 5.65% interest rate. payments 13 through 24, she's going to be making a payment based on 6.625. And then we'll refinance her because at some point, we will see interest rates start to tick down. I say buy now mainly because if you can afford to buy now, you get in a payment that you can afford. And when you're able to refinance, it'll be even that much better. Versus, let's say, if you wait, if the houses that you see now that are 300 and for simple math, $350,000 in 12 years, if they appreciate another 10%, which could very much happen if with the lack of inventory, and especially if we start to see rates trickle down. If that same home or similar homes are 10% more expensive now, instead of $350,000, you're talking more like 375. And that could potentially make the house for you a lot less affordable than
Hmm.
if you went now. Um, so that's usually my advice. There's a rare occasion where somebody maybe like if I have some clients that are renting now, so they're renting to own and the lease hasn't ended yet, and they just didn't want the mortgage payment to be that much more than how much they're paying for rent. So
Hmm.
they don't really have to worry about inventory, in that case.
Hmm.
That's a very specific example.
Right.
Yeah, unless you don't think that maybe that you're not going to be in the same metro area in the next couple of years, that's the only time I can really think to wait, especially if you qualify now.
That is very true. So, do you have any advice for people that may be on the fence right now that are saying, you know
Mhm.
what, Fred, I heard everything that you said, but I'm still not convinced?
So my thing is, no, I don't think anyone enjoys renting, and so too many people have predicted a housing crash and have been wrong. All of them, every single last one of them. Housing prices did level off earlier this year, but
Mhm,
they are really month over month. They really have, and year over year, are really starting to gain steam because, and a lot of that is because of rates. The only people who right now who are selling houses are people who have to move, really, that I'm seeing, or they're just really motivated, because maybe they're relocating or divorce or things like that. And so that has really created this demand problem because even with you look at existing homes for sale and even the inventory that builders are creating, it's just not enough to keep up. All the data says it's just not enough to keep up with new households and life events, things that cause people to want to need to buy.
mhm,
And my encouragement is at least just talk to a mortgage lender, and talk to a real estate agent to at least see your options and weigh it out. And also, there are just going to be some people who aren't going to pull the trigger. Unfortunately, I mean, we see, if but just think, I mean, we don't know what the next 2 or 3 years is going to bring, but housing is a safe investment. I mean, if you could afford to buy in 2020 or just a few years before that, and you chose not to, and you still haven't owned, you really lost out. You lost out
mhm.
on a windfall in home equities and low interest rates, and home affordability. It's just, that was just a great time that who knows when we'll see that something like that again. I don't know if we ever would see in our lifetimes another 2 years where housing appreciation was above 20% back to back like that. It's just kind of insane. So, I just encourage people to do their research also, and then listen to the professionals as well.
Exactly. And don't listen to your aunties and your uncles and
Absolutely, be careful about
everybody
those
else.
folks because I had a cousin who bought her first house in Florida, where I'm from. She actually is just south of Tallahassee, and we're from Jacksonville. But she bought a house, a really nice house. It's her first house. She got some down payment assistance. Was basically Florida's very similar to Georgia Dream, but actually probably a little better. And her cousin, I mean, her mom, who was my first cousin, called me and she was just worried. Oh, that's, it's a lot of money to pay for a house. And yeah, my cousin bought her and her deceased husband, they bought their house in the 80s when their kids were really little.
Hmm.
Probably only paid about $60,000 for that house. Interest rates, yeah, they probably were 12 or 13%. But she was just looking at that. I was like, she's fine. I was like, this cousin, she's smart with the money. She's always worked hard. And it's like, and she's got a freaking 2.5% interest rate. She's gonna be just fine.
Right.
Yeah.
Definitely, she will be okay. But yeah,
Yeah.
but a lot of people talk themselves out of buying because they're listening to other people, especially, that's what bothers me a lot of times is I understand have feeling like the need to get advice from other people, but when they completely talk you out of something
Yes.
that you're like you really deeply want to do,
Sure.
that really
Yeah.
bothers me. Yeah.
Yeah, as when you're young, say if you buy your first house and you're in your mid 20s, early to mid 20s, I know that can be tough. I remember, now that you said, I remember in 2020, I had a very qualified buyer who was looking to move to the Atlanta area from New York. She had a job that would allow her to work fully remote. Got her
Mhm.
qualified, the agent had her out looking at properties and everything. But here you go, the grandmas coming, cousins, this person, that person, they're all in your ear. And I think her grandmother talked to her. I can't remember what the reason was, but her grandmother talked her out of it. Now, mind you, grandma's not gifting her the down payment or anything like that. It's just she just didn't do it because grandma said nah, and it's just like, what do you as trying to advocate for your clients, like, man, that's a tough break because I would imagine she probably regrets that now.
Right.
I mean, has she bought that house? This was early 2020, a little bit before we saw the craziness
Hmm.
in housing prices. And she could easily be sitting on, has she bought the house 60, 70, 80 at a minimum $1,000 in equity.
Crazy, crazy.
Yeah.
Yeah, because some people are content with renting and they will talk
Yeah.
you out of, you living your dream of
Yeah.
owning a home because they're
Yeah.
content with renting for the rest of their lives.
Yeah,
So,
I have never, in college I didn't care, but I don't think outside of when I was in my very early 20s, I don't think I've ever enjoyed renting. As an adult, I bought my first place when I was probably about 26 or 27 years old. We did rent for a little while, me and my family, between houses. I did not enjoy that at all. It's just something about being in your own home regardless of things, what may happen. There's responsibilities, there's repairs and things like that
mhm.
that you have to make. It's probably one of the reasons why people are attracted to new construction. But even then, you just never know what could happen.
Exactly.
Yeah, absolutely. So yeah, renting is something I have never enjoyed. I'm not that I look down on anybody who's renting, but it's just to me it was never designed to be permanent. Especially here in the South, and there's some areas like California and New York where the barrier to own a home is extremely high.
Right.
Uh, but here, especially in the Southeast and places like Texas, where owning a home is a lot more affordable, it is becoming a bit more of a problem in the Atlanta metro area. But
Hmm.
it's something that I'm committed to understanding and finding out more ways of where I can potentially impact and keep prices affordable, not as a mortgage lender, but just as an involved citizen.
Right. That is very true. Well, I thank you, Fred, for
Yeah, I thank you. I thank you, Alicia. This is great.
yes,
I
definitely.
enjoyed this.
I appreciate you for coming and educating the people about the lending process and
Thank
all
you so
all
much
that.
for having me. Thank you for having me. And I hope anybody watching this, has can, benefit from it. And my information, you know, feel free to call. My all my information is out there. You can follow me on social media, mostly on Instagram. I'm most active on Instagram. So ATL underscore mortgage king is my
Okay.
Instagram handle. But I love doing things like this and being able to educate potential home buyers.
Well, thank you again, Fred, and I appreciate you. Thanks again for watching. If you have any questions, please let us know. Again, my name is Alicia Swan, and my special guest was Fred Curry with Silverton Mortgage. Have a great day.